Good morning, everybody. Welcome to the Flow Show, Friday the 13th. Unlucky for some, if you have the suspicious nature. It's the bad luck day, as they call it. Let's hope we sail through this unscathed and no bad luck befalls anyone. So here we are, Friday. Big news coming is the US CPI data. Markets taking a little bit of a pause. Ahead of that data later on. We'll obviously look at those numbers in a while. Right, let's go through all the bits and bobs that have happened overnight and this morning. US and Taiwan have signed a reciprocal trade agreement. They've put ink to paper, rubber stamped it and whatnot. So that's all going ahead. No doubt China will have its nose put out by that. They've already commented on various bits and bobs. But that might be something that comes up if Trump meets Xi later on this year or this spring. Over in Japan, business minister, we want to call him economic minister, Akazawa, says the gap remains with the US over investment projects. Says Japan aims to enhance economic ties for the mutual benefit with the US. So South Korea got in a bit of trouble for not being too quick to put forward their 500 billion or whatever it was investment plan. It seems that Japan and the US aren't that close to getting things done either. That might bring Mr. Trump's ire coming out at some point. Takechi advisor Honda says the government is not required to pick reflationists for the BOJ board. Because there's going to be some changes later on. Says the BOJ may see scope to raise rates this year, but are likely to avoid hiking in March. We then heard from a BOJ member, Tamura, one of the more towards the hawkish side of the scale. Says he personally feels Japan's inflation is becoming sticky and the price goal may be achieved as early as this spring. The policy rate is still very distant from the neutral level, which is a bit of a strange comment, which suggests that rates have a much further to go. But he says the neutral rate is at least around 1%, which is only 25 pips away. So this is Japan talking here. Their mentality over there, they're very distant, are very distant. With regards to the next potential BOJ hike, we've obviously got the spring wages coming up, and while the BOJ have said they don't need to see the final details of that, they will be keeping a close eye. They have a policy meeting mid-March and they have a policy meeting late April. So if they wanted to get all the wages known and just wait for that confirmation, then they'll probably wait till the April meeting. But both are open. Although I'll probably side a bit further with the April side, the April meeting, as when they might go again, but you never know. Over in Australia, there's going to be a new RBA member going on the rate setting board. Former Treasury and former RBA official Bruce Preston, who is a professor of economics, is going to replace the outgoing Alison Watkins. He's a bit of a hawk by all accounts, which will be welcome to Bullock, who's another hawkish one there as well. Looking at a bit of data this morning, we had Swiss CPI. I'll find it here. Where are we going? There. Somewhere here anyway. Where is it? Where's Swiss CPI? There it is, hiding. No real change. Year-on-year numbers coming in at 0.1%. It's no real help there for the S&B and the Swiss. Core inflation came in unchanged at 0.5%. I think the only positive you can take from that is that it hasn't turned negative, thus pushing a bit more pressure onto the S&B. Riksbank's Janssen says January inflation has confirmed the picture of downside risks to inflation, which will keep them modestly towards the dovish side. This one I'm still laughing at, even though it's 11 hours old. UK Chancellor Rachel Reeves says she has every confidence the UK will beat economic forecasts this year. I've actually printed that one off and stuck it on the wall to remind myself if I ever need a chuckle for the rest of the year. She's basically failed to hit any target that has been set, forecast, or whatever since they got in the job. That's how good that is. Starmer, he may have got over this recent resignation, getting rid of Saga, but the bad news keeps coming because he's just lost the head of the civil service and cabinet secretary. This is another in a 3 high-profile advisor civil servants that have left their posts after this fallout with Starmer. So things are still on shaky ground for him. The German Economic Ministry has said that indicators point to a continued economic recovery at the start of the year, according to their monthly report. I guess we'll see what comes out in the next lot of data as to whether that's true or not. Certainly the PMIs thus far haven't been the greatest. ECB's Kestrel Kazakhs, one of the more hawkish, said ECB officials are on monitoring mode on euro strength. He says he worries the strong euro reflects US dollar weakness and uncertainty. Says the ECB has yet to see the full impact of euro appreciation. One of the impacts from a higher euro is falling inflation, which is something they're going to have to keep a very close eye on. We've probably eased off a bit. Everyone's looking at the 120 level in euro dollar as sort of the magic number for when they may get a bit hot under the collar, but it will take a big move above there. You're talking 125s, 130s. If we're getting up there, then they will start probably really jawboning it. A bit of data from yesterday. Didn't have an awful lot out. We had, if I can find it, where are we? Down here. Existing home sales. Well, we had jobless claims first, which was a nothing burger as usual. One day we'll get a wobbly number and the market will do something. Until then, nothing. Existing home sales dropped a bit to 3.91 million, a fall of 8.4%. Prices were still up 0.9% from January last year, but they were down just around 10,000 from last month. We're seeing price rises really just dribbling lower and lower. So that does show that there's a bit of price stress building in the housing market. Fed's Mirren, he's trying to take over Goolsbeest's title as constant speaker. I think he's been out nearly every day this week. He says we are misconstruing how tight monetary policy is. Nothing else, still the same old comments about inflation and blah, 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 but no end to his shut up. Right, so yesterday, according to reports, the White House made a last-minute effort to avoid the shutdown over all this DHS stuff. That bid apparently fell on deaf ears because Democrats said that negotiations with the White House have not made enough progress for them to reach a deal on funding the department. And then whatever they put forward, the Senate voted it down 52 to 47 to reject the bill to fund the department, the DHS. And that keeps another shutdown today on the table. The House did go on recess yesterday with a 48-hour notice to return, so they still may jump around and cobble something over the weekend, maybe late today. I don't know. There is also a US holiday on Monday. So for all intents and purposes, we could have another shutdown happening sometime today, but at least we'll have had the jobs data and inflation data, and all the rest of it can go whistle. Russia apparently has a memo floating around that wants to see it return to the dollar system. Apparently they're trying to butter up Trump to get back onto the dollar system that they've been excluded from quite some time. Apparently the Kremlin is proposing an economic partnership with Trump, which includes this return to the dollar system. So trying to make nice on one hand. On the other hand, Russian Deputy Foreign Minister Ryabkov says that Russia will provide Cuba with material assistance. Cuba is one of those countries next in the crosshairs for Mr. Trump, who's trying to get things done all around. So Russia potentially stepping in. That brings back memories of the old Cold War and the Cuban Missile Crisis. You'll be seeing that a lot in comparisons in headlines, no doubt. And that's it. Bit of a boring one today. If you are interested in some other information, I've just put a few little items of interest if you're in our chat room regarding various bits and bobs. Let me call it up so you can have a look. Just if you wanted to have a look at stuff, there was a piece out from the New York Fed, a research piece from the New York Fed, just listing who and what is paying for tariffs in the economy. So it gives you just a bit of insight into what's going on in the tariffs saga. Also, there was this news out yesterday that customs bond funding is hitting a big shortfall, which is impacting a lot of importers. You have to put up a bond for customs for taking stuff in, and money's running dry, which could slow up imports and stuff and put a bit of pressure on prices as well. So that's just a bit of, if you're bored, type news that you can catch up on and have a read up and get yourself up to speed on what's going on there. Right, as I said, a bit of a quiet one. So let's have a look at some prices. Some interesting goings on in stocks. Now, I was looking at this yesterday in our chat room as well, and I was looking at how we had this strong recovery from this move lower, got back up to the 7K, and I said moves like that don't tend to be built on strong foundations. And if we got another sustained failure up here, we would probably see just a sharper pullback as we saw in the gains, and that's exactly what we got. Price action you want to see in an upward moving market. You want to see strength coming in behind the buying, like this, when you get these sort of moves, high, low, higher, high, higher, low, that sort of thing. It builds up, it builds up, it builds up, and if the moment's right, you get a pressure pop and off you go. It's all got a bit messy. We had this blowout that cleaned out all the strength from there. This move didn't really have anything behind it, didn't have solid foundation, so we got another blowout yesterday. What you want to see, as I say, is this sort of move going up where you move up, you refresh, the buyers come in, they get it up, they put some strength. That's the sort of move you want to see for a break higher. On the other side, bears will want to see now these broken levels failing and the similar thing happen. Break the level, hold the level, break the level, hold the level. Now, overall, S&P is still looking very bullish. If we bounce from here, we need to get, let's just give it those for a moment. So make it nice and clean. Boom and boom. So we've had a bit of support down against this level. We could be heading lower. We might go and test this sort of area down here, 67.80s, may even go down to here. If we do hold this level, it gives it the impetus to go back up to the 7K area. What we could be doing is just setting up a bit of a consolidation range. But if we do hold this level, it's then going to probably start to build up a bit of strength to then potentially go for a break. So that's the price action. I'm interested in this one because for me, this is very interesting price action. I'm looking for a topside break and to jump into longs if that happens. So I'm watching this one pretty keenly just to see what the price action is looking like. But if you don't get those foundations built, then you might be seeing more sharper moves, something like that, and that's consolidation until we get a move either down through the lows or up through the highs. So that's why you need to understand different types of price action, okay, from the stepping up to the sharp moves, because it does give you a little bit of insight in how the market may move thereafter. And if you can assess that, learn that, you have a good chance of knowing what and when the market is going to make a break or make a failure. And that's all the best information you can get in trading as far as I'm concerned. Right, Bran, you've asked about euro dollar. I am not surprised to see us trading here. As I said this morning, I could have bet my house when I closed up last night. Just after I'd done the options, we were trading 1880s, 1890s. I could have bet my house that we would be sitting at 1850, 1860 today, because we have some big expiries going off at that level. We've had that before over the last couple of weeks. We had expiries around the 19. The price just stuck there while there was nothing going on, no big headlines, no big data. We obviously have CPI later, which could be a mover. Is it going to be enough to kick us away from the options? Very possible if we get a big move. It's then going to be what happens after. So it's going to be very important to watch the price action after the CPI data and what the other dollar pairs are doing following that data. Let's say, for example, we get very strong CPI. You're going to see the dollar gaining, which means you're probably going to see cable dropping, Aussie dropping, euro dropping. But if cable's dropping 30, 40, 50 pips, Aussie's doing the same, and euro dollar's only going 10, 15, 20 pips because it's not getting far from that big option expiry, that potentially sets up a catch-up trade once we expire. So if the dollar is looking really strong versus the others, but euro's not playing ball, then I'll be looking to get in a short for the euro to come off after the expiries and catch up with the others. This is not something you want to be looking at if it's 20 pips worth of strength in the other pairs. I want to see a decent move. On the flip side, if CPI is weak and we're seeing dollar pairs rising, cables rising, Aussies rising, and again, euro stuck around there, I'll look to play a catch-up trade on the other side. I tried one the other week, didn't really work, so I got out. I think I lost 9 pips on it, but I'm very specific on those types of trades. If I'm trading these option expiries, if it's not worked after 30 minutes, 40 minutes, I don't care what the market's doing, I'm getting out because my plan isn't working and I'm not going to stay in the trade and go, oh, well, I'll turn it into something else. I'm trading an idea. The idea don't work. I'll get out of the trade if I see fit. So that's what to look forward to later on. But we do have, the problem we got here is we do have big option expiries all across the board. The next big tranche is down at the low 117s. So if we do get a big move, we may just move from trading around the options here to trading around the options down here. So that's a bit of a risk for that one. But if you're in our chat room, you'll know exactly where those big option expiries are. And for the rest of you, you know exactly how the price action plays out based on what we've seen over the last couple of weeks. So there should be no surprises for that. Cable, my 136.70 levels in effect again. Oh, give me these bloody things. So we've been mooching around it for the last few weeks. Sometimes it's support, sometimes it's resistance. We had the move under Wednesday, immediate resistance. Yesterday, immediate resistance. So we know how solid this is. It's a big line, but it's not a huge line. You can lean against it. If you want to pick a line to trade, you can lean against it. If you're going to short, you don't have to be wrong by that much. You know, if you know the top side, 137, 137.10. Okay, you could even go a tight stop above it, 80s or something. And then if you wanted to play 137, something like that. We have set up a decent range though. It's pretty much 137, 137.10 down to 136, 135.90, probably more so the 90 than anything. So again, nice tight range to play in. You're going to need to see a break and a hold of either side before you think about the next direction, because we had this little poke above 137, but then it failed. So we didn't confirm that break. Same thing happened, 136, little poke below to 135.90, back into 136. So you want to see a confirmation break either side of these two levels, and then you might get a bit more of a move the other way. Dolly ends having a little bit of a quiet one. Well, in relative terms, we've still got a decent, what have we got? A decent 100 pip range, 50 pip rate, 90 pip range odd for the day. So plenty of volatility still in this one. Some of the smaller levels that, get knocked out through the volatility, but come back into play when things are a bit quiet, are showing up now. So we've got this rough range, 60s, 152, 60s, 153, 60s, which is actually the daily range today. We've obviously got these extensions down to 152, 20s ahead of that big 152 level. We've probably got extensions as well on the top side to 153, 80s, 154s. Again, CPI data, is that going to be enough to kick this into gear again? What we can know is that we've got the potential for a reasonable double bottom going on here, which means we could have a reasonable bounce, maybe 155, maybe a bit more, if we decide to bottom off here. And that CPI data, as I say, is going to be important for all of it. If you're trading the dollar around this CPI data, the one thing you want to keep an eye on, as I always say time and time again, is keep an eye on them yields, particularly the 10s. We got back under 420. We're holding under 420. We're coming down to the old midpoint, the place where we like to mooch around either side of. So hot CPI numbers, we'll probably see a rally. If it goes and taps up near that 420, maybe 418, 417, 418, something like that, and holds there, any dollar rally that you see is probably going to peter out from that point. And if those yields start coming back down again, then that's going to start slipping and sliding. So as far as dollar yen's concerned, I'm still looking as a potential rally seller. If we get a decent move, 155s, maybe that 154, 40s, 50s, I might get in, stick on a little short, but I'll wait and see. This being a Friday, I don't know if I want to carry any sort of yen risk into the weekend. If we close up there, then I can leave it and potentially look at it Sunday night. But I'm still looking to be a rally seller in this one. And my ideal spots would be up, as I say, 154, 45, 50, and definitely into 155. Ali, Aussie dollar. This has been a bit of a weird one. It's been a bit of a head scratcher. You mentioned that, yeah, there was Japan's how do you want to capture a Chinese fishing boat, which is what a few countries like to do around there now and again. I don't know. I don't dare say this has got anything to do with this Aussie move. The first part of the move pretty much followed gold yesterday. This second leg came a bit out of the blue. Not sure why. I don't think it's justified by the China-Japan tension. Otherwise, we would have seen a move in the yen, which we haven't. So I don't think it's related. Probably more is the fact that we've had a pretty strong run, since last Friday. We've done, pretty much over 200 pips to the upside. So it got a bit of a nick on gold coming down yesterday. Probably a bit of late pressure in Asia, bit of profit taking, just a bit of squaring up before the weekend. That's my guess, and it is a guess. Hence why we've seen that sort of second leg down in Aussie. It's still very bullish. You have got a bit of a level here around 70, 30, 40s, around where we've hit the lows, just these prior sort of small highs. The 7K is going to be the key one for me. If we test that, hold it, then that's going to give it the legs, in my opinion, to go and at least get back up towards 71, 71.50. Top side, it looks pretty clear. We had this high 71s. We had that prior high 71s, second high break, tried to hold support. We've broken under it, and now we've got resistance there again. And into 71.50 is the next point. So pretty much every 50 pips, you got a decent level. But this 70 level is going to be key for me. And maybe we're in range. A hot CPI number might give us a nudge down there. And if we hold that, I might even have a little nibble myself on that one. Ali, what you doing in cable? You're short 136, short 136.10. Stop loss 137. Trade is breaking. Okay, you're at break even, so good thing. Bit of a middling level, so I assume you're sort of leaning against this area. Well, I don't know, mate. I never see a chart from you, so I don't know what you're doing in that. So what, you stop loss at 136.50. Okay, so you're messing around in the middle, Ali, which is something you like to do a lot. But that's your trading. You've got your levels, I'm sure. You can trade it as you see fit. Yeah, I'd like to see a chart from you now and again, if possible, and we get a better idea of what you're looking at. Right, I mentioned gold, so might as well have a look there. This one did a bit of a suck you in and spit you out type move. It sucked everyone into this tight range, 5k, 51k, and 50k, 51k. And then yesterday it had a bit of a wobbler, threw everyone out, broke the range, went through first line of support, but we stopped at the second line of support. Well, at least on my charts, which was down at the 48.80s area. Did have a little nick under, but then from the bounce, which got up to this level, failed, came back, and that was a very solid hold the second time, and that really gave the buyers the impetus to take it up. And lo and behold, we're bouncing off the 5k level at the moment. So 50k, didn't I? 5k level at the moment. So that's where your resistance is. We've broken out the range, and now we're finding it as resistance. Got a little bit of a build up, talking about price action. You know, we had this low, given buyers something to work on. Sellers are too strong here. The dip fairly shallow, come back again, another dip. If it holds here, gives it a bit of impetus to maybe then go on and take out the 5,000 level. Whether it goes all the way back up, who knows? There does seem to be still a little bit of caution in the gold market. No one really wants to push the envelope and be the one that takes it above 51.10 for fear of then sellers coming in and hitting it back down again. So still got a bit of balance. Might just see a bit of range extension, whereas this was far too tight after that big shock. Just might be widening things up a bit. So you know where the support is for today, at least down at 48.80s. If we're busting that, and we could be going a bit lower, maybe down to the low 48s, if not a bit more. As I say, back above here, it'd be interesting to see if we get up to that 51.10 area again, to see what happens with that one. Quick look at silver, because I know some of you guys like looking at silver. That needs a bit of adjusting, doesn't it? So just taking that move from last week, 38.2 is where we've been hitting ahead. Again, this is a bit of no man's land in the middle here. We've had a bit of a pullback down to this 74 area, bit of a bounce. This bounce doesn't look overly strong. So this one not remaining as bullish as gold is. If you compare the two charts, both had these big moves. Silver went on to make it a bit lower. Gold just had the one big move, then's recovered pretty much back to the halfway point of that. So different types of market here. This one looks far more bearish than gold does at the moment, which could mean those rallies are going to continue to get hit and we head down. Demi, Aussie, Kiwi. Am I looking for the pullbacks? No, I've only got half an eye on this one really at the moment. Probably you could use this 117, 116, 90s sort of a similar level as the 70 in Aussie dollar. It was obviously a significant high previously up here, so it's going to be an important level if we get down here. Yeah, I might look at it actually, Dimmy. Now you've mentioned it, we have had support in here. If we find support around this 17, 116.90, then it'd be looking good. You can keep a stop fairly tight. If you want it really tight, if we're breaking back below 80s, you've got this levelish just around this here, 70-80s. Oh, what's happened there? Get rid of that thing. There we go. Let's just these. Come on, Mr. Machine. Right, just around there. So this is one of those charts where you can pick a level to stick a stop behind sort of every 10, 15 pips. So depending on your risk appetite, you know, you could buy it into here from the figure down to 1690, a stop just under 78, 75, or you can give it a smaller trade, a bit more room, depending on how you want to trade it. But yeah, that's might be another one I'll have a little beady at for a little bit of a play, because there's nothing here that looks bearish at all. So this could just be a bit of a pullback that we're seeing, and a bit of a, you know what, I'm going to have a little go now. So just give me a second. I'm going to have a little nibble now. There we go. Just bought it at 05. See, you've talked me into it, Demi. You've talked me into it. And I'll stick that in the trade to him once we finish the flow show. No, don't apologise, mate. You've highlighted it, and I like the look of it, so I'm going to give it a little go. Who knows? That's trading. The old dollar mex, bit sideways on that one as well. Not looking like it wants to do much. Looking like maybe we're going to finish in the middle of this range here. If you're trading this one, again, look at it for the CPI data. You might get a move that goes and tests one edge of the range, but nothing else changes. Could be a half decent fade play for that. Going to look at the Swisses, because they're in a bit of focus. Still looking fairly weak. Euro Swiss, very difficult to buy it down here with this sort of price action. Looking very, very weak. The only reason I would see to try along is if we come down and test 91 and hold that again, because that will be a bit short term, but it will be, you know, Tuesday, Friday, 3-4 days where you've made two lows, might give it something to work with and bounce a bit. But if you're looking at something like that, you'd have to keep it fairly tight, you know, really start taking your profits as soon as you get them on the board, partials or otherwise, locking the rest below. If you go fishing, you've got to go fishing very carefully, because, again, there's nothing bullish about this. It's very bearish. Dollar Swiss, similar, but that's the sort of thing you want to look for. So we haven't quite got it in Euro Swiss. We have to a bit of a degree, but it just doesn't look as strong a formation as that, because that's over a wider time frame. Okay, so we had that low, came down, couldn't quite get to that low. It matched the lows right after. So now you've got something to work with if you want to try and catch the knife here. But still, okay, decent pips, but the bounce isn't looking anything great. So if you get that sort of setup in Euro Swiss, you know, we move down to somewhere here, 91 again, and it holds, then you might get a move up, might get 40, 50 pips out of it, all being well. So that's the sort of price action you want to be seeing. Dimmy, thank me or blame you. I'd never blame you, mate. Not at all. I'm the one pushing the button. So no, you've made a good observation. Are you trading it? That's a question, I think. Are you going to have a go as well? And where do you see your levels for that too? Let's have a look. Right, anything else for anything else? What else have we got? Euro sterling still banging its head on that Poxy 87.20 level, which I actually don't mind, because I'm actually flat and I would like to be long, but I don't want to be long up here. And I think there's still some time to go, and seeing some UK data that may still be a bit positive in the early part of the year over the next couple of weeks. And if that's the case and we get another run down, probably a bit of a hope trade to think about it getting back to the low 86s, 86.20s. Still kicking myself a bit that I didn't get anything on down there last time. But another move down there, I might start picking it up again, but I don't want to chase it. I'm not even that interested in a break trade above here, though that might still be valid, because we've had these fake outs. So again, the only way I would maybe trade a break is if we broke, came down, tested it, and held it as support. You know, sort of this thing, break, hold. That's the sort of price action I want to see, but I'm certainly not going to be buying shallow dips at the moment, looking for a break, because it is proving very, very solid still up there. Right, if you boys and girls have got nothing else to throw at me. Oh, Fred. Swiss yen. You do pick them. Let's see what's going on in probably Swiss yen. Probably nothing. Where would I sell? Good question. Let's have a look. You've probably got, I mean, this is very flaky. You've probably got a reason to maybe sell it around here. Maybe, you know, stop above the 200 or into the 200. This to me doesn't look very clear at all. Not in the slightest. Not in the slightest. I really don't have any idea where I would sell it. There's not even anything really stand out for me. Maybe around there, 201. You could maybe pick something out of that, but it's not a clear market. You know, I obviously don't tech this one a lot. You know, it's off to the races. It's not like dollar yen where you've got some old levels. This is another one of those markets, assets where you're in uncharted territory. So you've just got to let the levels build up, try and find where the resistance is coming in, where the support is coming in, that sort of thing. But sorry, mate, this is not one that looks very nice to me. Not one I'd look to trade. Could trade it, as I say. You know, maybe this up here is probably the best level, but yeah, I don't like messes, and there is no clear price action for me in this one whatsoever. Right. Well, you said maybe wait for dollar yen to rally to 154.60. Well, if you're watching that, trade that one. Why do you need to trade? If you've got clear levels in dollar yen, why do you need to transpose that onto Swiss yen? It's like people who say who look at oil to trade dollar CAD. If you're spending that much time looking at something else to trade something else, trade that asset in the first place. You know, don't transpose stuff over. Dollar yen's obviously the better market to trade, the clearer market to trade, in my opinion. The better, stronger levels, historical levels. So trade that. Make your life easier. Right, I'm going to call it a day there. Thank you, everybody, for coming to the Flow Show this week. Do take care of that CPI data later on. We'll be covering it live on Face as always. So please join me there. Otherwise, have a great day. Have a great weekend. Thanks for coming. We'll see you all on Monday.